Craig Johnston is Chief Market Technician at Piper Sandler. Steve obviously still with us. Craig, you wrote that, I think, yesterday or the day before. This is not some new comment from you. So obviously today is making you look very smart, by the way, and correct. You couldn't anticipate the president's social media post, but how much was this a market, or is this still a market that is really, and I hate the term, priced to perfection?
Well, Brian, thanks for having me on. And to that point, when we look at this market, I think a lot of investors were looking for an excuse to take some profits. And, one of the first things that I always do, Brian, on days like this is I walk down to our trading desk here in Minneapolis and I check in with the traders. What are they seeing? They're the smart people out there ringing the register every day. And I ran into one guy we call the Rainmaker. And the Rainmaker is like, hey, there's not a lot of volume happening right now. And people are just sort of hanging out and watching this sort of unfold. So it sort of says to me that this is an excuse to take some money off the table, more so than anything else, Brian. And I think this is going to be somewhat short-lived from our perspective.
Now I'm curious about who this mysterious Rainmaker is. Okay, I assume that's a positive term. So what is the desk then saying, Craig? What are you saying about what we're seeing? Oh, like you said, maybe overreaction.
It is a little bit of an overreaction. But again, in these bull markets, Brian, you always get these sharp sell-offs and they quickly come around and they're bought again. And I do think the buy the dip crowd will be around. And what we're seeing from a technical perspective, Brian, is really two things. One, when we look at one of our indicators that we've looked at for a long time here at Piper, measuring the number of stocks above a very simple 40-week moving average, that has been slowly deteriorating. In fact, it has been deteriorating since the end of August. And it is now getting to levels where perhaps in the next week it could actually go into a sell signal for the first time since we came off of the lows in the April timeframe. On a shorter term basis, Brian, if we go back and we look at a very simple momentum indicator, RSI, on a 14-period basis, when it starts breaking through the midpoint at 50, we did that back in the February timeframe, and the market sort of picked up steam to the downside as a lot of the CTAs kicked in. I suspect that is something that we could see kick in next week. So this is, from our perspective, sort of a flashing yellow light. It's not an end of the bull market by any means, but could we see a pullback to the 50-day moving average at around 65.30, or perhaps even pull back all the way to 61.50? But to be clear, Brian, this is why I did not raise our price target when we hit it at the end of September, because we thought that the market needed to come back in, and we're getting that now.
You think there's a real chance the S&P pulls back to 61.50?
It is a distinct possibility, especially if we do go through the midpoint of a 14-period RSI and then also go back and move through the simple 50-day moving average. It could accelerate to the downside. There's a lot of computer trading going on out there. But again, Brian, having just been traveling and seeing clients, there's a lot of large institutions that did not participate that well off of the lows to the point the other guest was making. And hence, they're hoping for some sort of shorter term pullback, and the buy the dip crowd will be there. And again, this bull market is not over. We will enter the fourth year of the bull market. It is usually fourth years are usually pretty good, up around 12 and change % for the full year. And we are optimistic for next year. But short term, I'll look to raise my price target on a pullback, not while it's sitting here at the highs.